Today in Crypto. By Jeffrey Smith Investing.com. The first bubble alert of 2021 hasn't taken long to materialize. The price of Bitcoin rocketed by 44% in the first 8 days of the year, as investors big and small poured money into the digital currency on the back of investment bank advice sketching out the prospect of almost unimaginable gains. As so often with Bitcoin, the rally quickly gave way to a sharp sell-off, but the dip quickly found buyers and the uptrend of the last few months remains firmly intact, with an increasing number of Wall Street's finest lending their seal of approval to the digital currency. Its momentum seems unchecked for now. JP Morgan followed Citigroup last week in publishing research that put an eye-popping notional value on Bitcoin, based largely on the premise of it replacing gold as the preferred store of value play for investors of the digital age. Strategists led by Nikolaos Panagiotsoglou noted that investors still have over 4 times as much tied up in gold coins, bars and exchange-traded products. Shifting all that into Bitcoin would theoretically take the price as high as $148,000, they argued. In December, Guggenheim's Scott Minerd had used similar reasoning to slap a price of $400,000 on the currency. Yet it was Minerd, more than anyone, who contributed to one of the familiarly gut-wrenching sell-offs over the weekend by saying that the rally over $40,000 had gone too far, too fast, and that it was time to take some money off the table. Bitcoin prices subsequently fell 21% over the next 48 hours. Store of value, indeed. In fairness, the more thoughtful Bitcoin advocates don't make any claim to it being a store of value today. Instead, they argue, it is a status that awaits Bitcoin at the end of a long journey toward acceptance, in which early scandals of poor custody, money laundering and wild price swings with no transparency are but distant memories. And in some respects, the rally of 2020-21 does indeed look more fundamentally solid, in that the inflows are coming largely from institutional investors playing the long game, rather than retail investors in a hot flush of FOMO. Tellingly, this rally has not been accompanied by a rash of essentially bogus initial coin offerings aiming to take the latecomers for suckers. Skeptics can still argue that Bitcoin still doesn't, and probably never will, fulfill of the 3 functions of money, namely, to act as a means of exchange and a unit of account. No major merchant will accept it, and no tax authority will accept payments in it. Bitcoin advocates argue, with some justification, that the same applies to gold. However, the comparison only goes so far. Gold has an age-old relationship with jewelry and ostentation, that has the functions of satisfying human vanity and heightening human lust in a way that abstractions such as digital currencies can't. However, such considerations are playing little part in a rally driven by loose central bank policy and negative returns on traditionally safe assets such as bonds. Over $18 trillion now offer negative yields, according to some calculations. Both gold and Bitcoin prices may yet be vulnerable if central banks succeed in reflating their economies and restoring a world positive returns on safe assets. But it would be a brave investor that bet against digital currencies in the near term. Major business magazine Forbes has featured Gemini co-founders Cameron and Tyler Winklevoss as the richest Bitcoin, BTC, billionaires. Compiled by Forbes crypto-focused reporter Michael Del Cascio, the ranking provides a list of Bitcoin investors that won the most from Bitcoin's massive surge up to $42,000 in early January 2021. Continue reading on Cointelegraph. First mover. Market signs look healthy as Bitcoin sell-off subsides. Record trading volumes have accompanied Bitcoin's rally this year, and subsequent swoon, offering a healthy sign of just how much price discovery is taking place in rapidly growing, to $3 trillion, cryptocurrency markets. Bitcoin whales kept accumulating during Monday's crash. Larger investors, or whales, look to have reacted differently than retail investors amid this week's Bitcoin price drop. 12 years ago, on January 11, 2009, the first ever Bitcoin transaction was performed, proving the viability of blockchain transactions. At the receiving end was Hal Finney, a computer scientist. Finney received 10 bitcoins from Satoshi Nakamoto, the man behind the Golden Mask and Bitcoin's pseudonymous creator finished and Bitcoins, which was literally worthless then, would be worth over $350,000 today. The transfer came a week after Nakamoto began running the Bitcoin network on his PC. Finney is well known for his work in the advanced cryptographic system and is the first person to receive Bitcoins in a transaction. A few people have even claimed that he is Nakamoto. Sadly, Finney succumbed to a rare disease in 2014 and we may never get to know the identity of the real Nakamoto. Finney was undoubtedly one of the pioneers of Bitcoin. In a Bitcoin Talk forum post in 2009, he claimed to have mined some of the early blocks. "I mined block 70-something, and I was the recipient of the first Bitcoin transaction when Satoshi sent 10 coins to me as a test. Beyond being the first person to ever tweet about Bitcoin, Finney was also one of the first persons to predict the price of Bitcoin. In a mail to Nakamoto, he predicted that each coin could eventually be worth $10 million. Running Bitcoin, Hafen, at Hafen, January 11, 2009. Hit the like button and subscribe to the channel.